This is the Real Estate Guide to Success video series. Mr. Ronnie Adams is here. I'm Vance Poindexter, and today we're going to talk about no money down options. Is it still something that's viable in tougher economies? Is it still an option for people? And that's what people are really starting to ask right now. So, is it really still available to people?
No money downs are it's funny. It's almost like looking for when we're looking at being investors. Everything is a needle in the haystack. There's always more than one way to skin a cat. So are they out there? Or are they out there? Yeah, we can find. It's just how we structure it. We don't want to let viewers know, or we want to let viewers know that our economy has changed. And it will change back. So we're giving information that if it's a little hard to use today, then it's going to be easier tomorrow. We were using it yesterday. So are they still out there? Yeah, we just have to be able to structure them certain ways.
So it's more, we're talking more of a framework or a structure of what kind of things you should be looking for. It may not be the exact letter of the law, this is how you do it, but more so this is the structure of things you should be looking for to do it.
Yes, our viewers have to know that, look, we're giving you a blueprint.
Right.
It doesn't mean that you're going to have to kind of deviate here and there for your particular area,
your state.
Exactly, because the economy or the housing market that's here in New Jersey is not the same that's in Las Vegas, is not the same that's going to be in Florida.
Gotcha.
So we're giving you a basic framework where you can say, okay, I need to be kind of looking for this. Let's see how it works in my area.
All right, so we're basically talking about things that have worked for you in the past in the area that you are dealing with.
Yes.
And a lot of these are applicable to other areas, but people need to understand the basic fundamentals behind these so they can apply it to their situation.
Most definitely. Definitely.
Let's talk about first owner occupancy and living in a house and how that can allow you to get into a house for a cheaper down payment.
Yes. If you are going to live in a home and you're already thinking that I'm going to rent this home at some point, so I can go now because when you fill out your mortgage documents, it's going to ask you, is this your personal residence or is this going to be a rental property? You can say it's going to be my personal residence. On personal residences, then you're going to have a lower down payment.
Okay.
You can go FHA, then you can get 3% down. You may even be able to do a 80% and 90% piggyback, they'll call it, where now I'm financing 90% of the home, for something that you are going to live in.
For a period of time.
For a period of time. As long as when you originally fill out them documents, you're living in it at that point. And I would say, you need to stay there for a year. There's not like that someone's going to come knocking on your door and saying, are you still living in the home? But we want to let everyone know that you don't want to fill out a mortgage document that is a contract. And then you're going to lie on it right from the beginning, So you could do FHA, that gives you a lower down payment.
Okay.
Stay there for a year, you move to another home, you rent the first one that you're in at that lower down payment.
Gotcha.
And you're going to be able to, have another lower down payment. But you're not going to even be able to do that for 30 homes.
Sure.
You're going to do that for 2.
And
that's it.
You know what I mean?
Exactly, just to get you started.
Now, you also kind of mentioned the 80-90% or the 80-20.
Yeah, you could do an 80-20.
It's another kind of situation.
Now, what they were doing a couple years back, and which may be a little bit hard to find now, but I'm sure they're still out there, where you'll have what they call an 80-20, meaning that your first mortgage is 80%. Okay. So, or it can be even 70%. Let's say that this particular mortgage company says, okay, on a rental property, we're only going to give you, this particular lender will only give you 80% of the loan to value. Okay. I think we had a email or someone had made a comment that they can't find anywhere where they could have something where they couldn't find a mortgage company that would say, okay, we'll give you more than 25%, where he had to put 25% down. If you had to put like 80% down, then again, a couple years ago, what they were doing was they would say your first mortgage is 80%. we'll do a second mortgage with a different company for the other 20%.
Okay.
So that second company is like a home equity loan, but you do it all at the settlement.
So how much do you come out of pocket with in those situations?
Well, the loan amount you don't come out
At
because
all.
you're getting at all because you're getting 100% of the finance.
Fully financed.
Fully financed.
Through
Two different mortgage
Okay.
companies.
Okay.
But you're still going to have closing costs.
Okay.
You know, so your closing costs may run whatever it is for the particular mortgage company. And closing costs, I believe that we did a video or write-up or something, closing costs are negotiable.
Right.
Just because they say they want $3,000 doesn't mean that you have to pay that, you know, so that's all negotiable, so.
So let's also talk about, you said 80-20. There are other options available, maybe 70-30 or.
Exactly,
Okay.
exactly.
So,
You
again,
might be 90-10, you know.
basic
it's-
structure,
yeah.
basic framework. What you're trying to do is get two separate loans that are fully financing the property
Yes,
for you,
yes.
such that you don't have to have a down payment.
Exactly.
Excellent.
You know, we're just kind of giving everybody a light bulb. Oh, I didn't know they did that.
So our viewers should go in and actually ask what kind of programs are available when they go to the mortgage companies and see what's available.
Yes, if they already know that, okay, I'm looking for a home for X amount of dollars, 100,000, and I don't want to put out any more than that. When I call a particular mortgage company, which in the beginning I would just cold call them, I open the telephone book and just start calling them up. And that's how I learned how to deal with mortgage companies. But they need to say, okay, well, what type of loans do you do for a investment property? Okay, well then this is what we do. You know what? Do you have anyone who will do a piggyback loan or a second mortgage at the same time?
Right.
Make the loan officer work for you.
Gotcha.
Make him go out and look for it. And he'll look for it and see what he comes back with.
All right, the last thing we have here in support of no money down financing is use of cash advances on credit cards.
Yes.
It could be used to go towards that FHA 3% or to put down some of the down payment
Yeah.
that you were talking
Now,
about.
what you need to do is that any mortgage company, whether it's going to be FHA or whatever, they're going to want to see that you have the funds in the bank.
Okay.
So they may want to see that you have them for 2 months, 3 months, whatever the time period is. If you have a credit card that you could take a cash advance off of, which we know that it's a little bit hard now,
Yeah.
but you know, there's
It's
still
not- it's
maybe
an
out
option.
there. Yeah, exactly. Then you could take a cash advance for whatever your 3% down payment or whatever it is, put it in your bank account.
How long?
You let it sit there for the time period that the mortgage company wants to see
Okay.
that money sit there. So whether it's 2 months, 3 months, whatever it may be. Now, once that money sits there for that time period, then when the mortgage company says, well, we want to see your bank statements for 2 months or whatever it is, then you give them
You
the
got
2
it.
months, it's right there.
Right.
And then you can end up purchasing the house, even though on your credit card, you still have that payment you have to make.
Right,
So
so how
now
do you deal
what
with
you're
that?
going to do is, it might take a year, you know, where you're going to take another loan on that home again. Because remember, we're not buying a home for what they're worth. So if I bought a home for $100,000, that home needs to be worth $150,000. So even if I got 100% financing, I still have $50,000 equity in the home.
Okay.
It doesn't make sense to buy a home for $100,000 and it's worth $102,000,
Right.
you know. So then I can always come back at some point and go to a mortgage company or a bank. It'll be easier to go to a bank, and we have done many videos or articles that says, you know, go to a bank for a home equity loan because they're cheaper.
Right.
There's no down payment, there's no closing costs or anything. So whatever that 2%, 3%, 10% that you put on your credit card, you should be able to get that out the house as a second mortgage.
And that'll be
or
at-
a third mortgage, maybe at a third at that point.
And you'll be paying, you're going to pay that off from your advance because that's
Yes.
at a higher rate.
Yes, because your advance on the credit card, it may be, you know, it could be 15%.
Yeah.
But we're not concerned about the interest rate because I already know that I'm going to refi the home at 7%, 6%, whatever it is. Now, we also want to let our viewers know also that you need to figure this out
Ahead of time.
ahead of time.
Yep.
Or you will get stuck with that 15% on your credit card. We don't want to get any emails that say, oh, I did it and I wasn't able. No, you need to be able to look at all this stuff before it's planning.
Yeah.
Everything is planning. So you need to already know which mortgage company am I going to get my first and the second if I need to do that. And which mortgage company am I going to get the amount of money that I need to pay off that, home equity loan, or the credit card. I need to already know that up front, before I purchase the home. Or you could get stuck with that 15%, So let's not get it twisted. I got stuck one time, and it took like a year to be able to pay. Now I'm paying $1,000 a month because, of course, it wasn't 3%. I think I was putting the whole house on it, So I was paying a much more, much higher. Why? Because I didn't do my homework, and I got a little lackadaisical because everything was coming real easy. Right. Well, the mortgage company that I was using went out of business, but it was in between the time that I already had the money out. So it took me a little bit longer to find someone else to get that money off my credit card. You need to be able to plan.
There you go. No money down options or options to pay a small amount down from Mr. Ronnie Adams. Thanks again.
Can't complain.